Can't absolutely. You can't take your eyes off from either Shriram or Paytm for that matter. And maybe for Paytm, the gains are not it, given that the government has now approved their FDI proposal for payment aggregator business. Paytm can now approach the Reserve Bank of India to seek payment aggregator license, which the central bank is going to then navigate. So a big overhang gets lifted from Paytm. 8.25 million shares traded already. The stock is back at those 500 plus levels. In fact, let me welcome on board Aditya Agarwal, Kunal Bothra, as well as Pashupati Advani and figure out what they're making of the market and, of course, individual names right now. Pashupati, hi, afternoon. Let's discuss Paytm first, considering the news just came in a few odd minutes back. The market time and again tells you that there is money to be made in some of these disbelief to belief stories, but would you have conviction on Paytm just yet?
So I am actually crying because I bought it right and then sold it about $50 ago, and now watching. But I think, if they're getting their license, it'll be wonderful. If they don't get it, it'll be again a problem. But I think they're being smart. If you use any of you viewers have used Paytm, you see they're trying to capture multiple bank UPIs, and therefore they're going to use, I think, HDFC Bank, SBI, Yes Bank, and there's one more that they're using that will all benefit. And they are already positioning themselves as an aggregator. So I'm sure that given they won't have the money with them, the money will be lying in the banks. The RBI should give them the license. But I guess how long it's going to take and all that stuff, we won't know. But I mean, it's therefore going to run because now it stabilizes again. They will lose a little bit of money that they were making on transactions on money. They have to give some of it to the banks, but I think that all in all, the business model remains intact. So it's good news for Paytm.
Okay, so it's good news for Paytm and shares coming in from the market with that 10% uptick. But do you think this move on Shriram Finance, Mr. Advani, is a bit overdone? Did you get a chance to look at the numbers?
Haven't looked at the numbers, but basically, I'm not very happy about the NBFC space because I think that a lot of them have made loans that have been made what I call on computer. You walk into a shop, you buy a white good, you just give your details, your Aadhaar card, and you get a loan. So there has been very little due diligence done. So let's see how it all settles. Shriram may end up being on the top of the pile, but the reality is we don't know who are the winners and who are the losers. Um, but I will say one thing that, like, for example, the guys who had lent against gold, they are obviously going to be hurt by the fact that gold has gone down in price, and therefore their loan to value gets hurt. So whether they've done the due diligence as to whether there's repayment possibility and things like that needs to be done, I think that those are all questions to be asked. And whether Shriram Finance has either directly or indirectly given to people who lend for gold, time will tell.
Okay, point taken. But since
But Kunal, let's address the market as well. I mean, of course, there are those individual movers right now, and there's the Morgan Stanley note now coming in and Shriram Finance as well. But the index, almost 400 points up, start of a new series.
I think this is phenomenal. This is exceptional. I think if budget day was a surprise, the market reaction, then this
Today's
is just
a bigger surprise.
then this is just a big add-on to that. I think it's no words for that because this kind of a move was completely unanticipated and expected, at least on the Nifty and the Bank Nifty front, because we expected the indices to broadly get into a phase of consolidation. So the markets are basically indicating that they're shrugging off any kind of a worry from the global market cues which were handed over the last 3 to 5 days, where we saw the global markets correcting by 3 to 5% broadly. The mid caps and the small caps are doing exceptionally well. And today again, one of the classic days which we had repeated, I think, few weeks back, that the large caps are showing signs of classic outperformance. And what I like about the market today in terms of large cap names is not the usual large cap stocks which have been doing really well, but there are a lot of underperforming stocks, and the ones which were correcting over the last 2-3 weeks, they are making a very strong comeback. So it's almost like a V-shaped recovery for many of the large cap names, and I think that's adding to the positivity as well as in terms of sentiment to the market mood.
Yeah, but I clearly think that the market doesn't need any positives as such. It's turning bad news also into good news, and there could be classic cases of the likes of Shriram Finance, etc., wherein the street thought initially that there was some pressure as far as NIMs are concerned. There is a bit of chink when it comes to the asset quality, but no. not buying any of that. We are only seeing the glass half full at the moment. But Aditya Agrawal is also with us. Aditya, your quick view on the market mood, and if you have a view on individual names like Shriram Finance as well as Amara Raja Batteries, because that's managed to inch up 7% in the last few minutes itself.
Afternoon, Nisha. Thanks for having the show. Clearly, markets are up and about, and I concur with Kunal's view on the fact that everyone is taken by surprise as far as the Nifty is concerned. Nobody had thought that markets will move up, and how 400 point on the Nifty and 350 point on the Bank Nifty clearly shows that the markets are still going very strong. Despite the fact there were indicators yesterday and day before yesterday suggesting that market could enter into a consolidation phase, markets shrugged everything and it's up 400 point. Looks very strong going for the markets as of now. If I talk about levels, 24,800, which was the previous peak, may act as an immediate hurdle. 800, 850 may act as an immediate hurdle next week. But I think the way the markets are going up today, it can take that out next week. Bank Nifty is something which needs to be watched out for, because clearly that has been a marked underperformer. And with the kind of move that we're seeing in the Bank Nifty today, if it manages to sustain above 51,500 next week, I think a Bank Nifty is something which can again look at new highs closer to about 53,000, because clearly there has been a massive underperformance in the Bank Nifty. Now, talking about the couple of stocks that you spoke of, first let's talk about Shriram Finance. It's a very strong going for the stock, and I don't see any reason to exit from the stock. If you had bought the stock at lower levels, I would strongly recommend continue to hold on to it. Very strong looking chart setup, matter of time before it breaks out of that previous high of 3,060 and goes into a territory of 3,400. If I take a look at the longer term time horizon charts and the kind of volume that I'm seeing in trade today, no doubt that the stock will break out above that and can head to levels of 3,400 in the near term. As far as Amara Raja Battery is concerned, I'm not too gung-ho at these levels in the stock because stock has already been outperforming big time. I see slight divergences there. Immediate resistance on the upside is at 1740 odd levels. So if you already have it, maybe continue to hold on to it for a target of 1740. Fresh investment at current levels, I would try to avoid in Amara Raja Battery. If it corrects back to 1500 odd levels, then yes, I could look at fresh entry in Amara Raja Battery as well.
Okay, that's the take on some of the buzzing stocks. We're going to take a very quick break on that note, but come right back. It's an extremely buoyant and exciting market. We'll discuss all the other movers on the other side. Holding up very smartly, a good 400-point move on the index alone. Good market breadth, a lot of lively spots such as Paytm, Shriram Finance, Divi's Labs, Apollo Hospitals, even Wipro, which cracks so hard after its numbers. That's also jumping up by about 4%. Metals as a pack as well is looking quite smart. Tata Steel, Hindalco, JSW, all holding out very, very smartly. The only odd losers are in ONGC, DRL, HDFC Bank is absolutely flat, and Axis, ICICI Bank in at least today's market look like relative underperformers. That said, from within the broader end of the market as well, a Bharat Forge, which has seen a dash of about almost 6%, Piramal Enterprises holding up 5.25% right now, Ashok Leyland, Emphasis are some of the other names which are looking extremely buoyant. Kunal, what banks could not, you think IT can do? A more convincing, long, sustainable, durable uptick, you think, on the index alone?
Yeah, I think there's a strong possibility, and I think now with the move which is maturing for Infosys, TCS, and then trickling on to the other mid-cap IT names, I think I would probably expect that this could now be a multi-quarter, even a potential multi-year up move for many of these IT stocks, because we've not seen these IT stocks moving up in a hurry by margin of 20-25%. I think the index has already rallied some 25 or 26% broadly from the June lows. So I think in that context, it's been an exceptional performance for the IT stocks, and the best part is that the large cap IT stocks are the only ones which are performing. And even at a point where the likes of, I think, Wipro, which has underperformed in the last few days on the back of results, mid cap IT stocks which are making a comeback for themselves above their respective 200-day moving averages. Still, many of the mid cap stocks are almost 15 to 20% off from their previous major swing highs and lifetime highs. So I think in that context, I would still believe that the uptrend would continue for these IT names. What could probably happen is that the horses could change. for these IT stocks. So now what we've seen is large cap IT stocks doing well. There could be now a phase that the mid cap IT stocks could start to outperform. L&T Infotech Mindtree is another name which is heading towards a breakout. Coforge has done exceptionally well above the 6,000 levels. That also looks very attractive. India Mart is something which is also looking quite strong on the short to medium term charts. There are many names from the IT, ITS, which are looking very attractive on the mid cap IT front. I think that's where the next trend could probably seep in.
Okay, so mid-cap IT perhaps could be the next trend to watch out for, but what's trending today is insurance as well as metals. So insurance names like NIA, which is New India Assurance, GIC as well as LIC are quite excited in the trading session. Also the metals pack is doing quite well, a 3% gain coming in on the metal index. Mr. Advani, between the insurance pack as well as metal names, any top recommendations?
I think they're both fine because looks like the government is still continuing to spend on infrastructure, which is good for metals, good for cement, so that and also good for logistics. You mentioned about insurance. Insurance is becoming the new jewel in the pack, and it's actually going to be pulling the whole banking sector because all the banks own a big part of insurance companies. India's getting richer, and people are starting to buy insurance, and I think that's good. And the best part is you listen to LIC trying to get agents. They're advertising to get more agents. If they're in the game, obviously they're seeing that there's a lot of business out there, and we're seeing this in the movements of the stocks, which have all moved up 5 to 10% over the last few days.
Right, okay, that's that on some of the life insurance plays. Aditya, any of the charts that's standing out? Because since budget day, we've seen quite the sustainable move, especially on the life insurance plays.
Absolutely, Aisha, no doubt about that. And there are a couple of names which still stand out, I believe. Let's start with LIC first. I think after a big lull phase, stock has finally managed to cross its previous peak, and now I think stock is getting up for a move towards 1300. So even at current levels, it's a very strong buy. Looks like it will test levels of 1300 on the upside. On the downside, 1150, 1100 is a very strong support for the stock. So I would suggest LIC is still a buy at current levels. One can go ahead. ICICI Prudential is something which has outperformed big time the most of the life insurance companies. And this is one thing I think one can still look at on the charts. It looks very attractive. I think 10 test levels of 810 on the upside with the support on the downside at 700. So ICICI Prudential is also something looking very strong. And New India Insurance, the one that Anisha spoke of some time back. So looking at the setup today, 16% up move on very strong volumes. If we get a follow through move on Monday above 300 odd levels, I think this also takes all the check marks, and then one can go ahead and buy New India Insurance as well for a target of 350 on the upside.
Shupati, thanks as always for taking the time out and joining in today. I'm going to quickly take it across to both Aditya as well as Kunal, get in some closing ideas too. Aditya, what's on your list?
So I've got a couple of buy recommendations, Aisha. First is Maruti Suzuki. Looking at the way the entire auto space is buzzing around, I think Maruti is an excellent buy at current levels. Next in line for an outperformance after Tata Motors. So at current levels, it's a buy for a target of 13,800 on the upside. With a stop loss at 12,200. It's more of a positional buy because I have a higher target here. The second stock is Ramco Cements. Again, the entire cement space has been doing well for itself, and Ramco is something which has outperformed the entire pack, and now it's broken out from that downward sloping trend line on good volume. So I think there is higher levels here which is coming through. 900 is the target, 790 is the stop loss, so buy on Ramco Cements as well.
Right, and Kunal, what about your closing strategies?
Well, I would believe Bajaj Finance stock, which has been beaten down significantly, I think that stock would have bottomed out. There are clear evidences that the stock has formed an RSI divergence, reversal nature in terms of indicators. So a major bounce back is what I would expect on the stock in the near to medium term. Bajaj Finance is something which I would look to suggest on a closing trade.
Okay, that's that on closing ideas. We're going to take a very quick break. Interim dividend announcement from Vedanta. Discuss all those stocks after this very short break.
If you like this video, then like, share and subscribe to ET Now.